Hello, it's me again, Kumaitile Kositile, and I'm happy to take you through the debt management module of the first personal finance mastery. This one is really applicable to, I always like to say maybe to all the personalities because we do struggle with debt. But if you are a spender, you are more likely to struggle with debt more than any other personality. So I want you to pay attention to this. We are talking about debt, but first things, let's understand what debt is. What really is debt? We normally say that when you borrow debt is what you owe when you borrow something or when you have borrowed something. So debt could be you could owe maybe cash, or maybe you borrowed cash, or maybe you borrowed something tangible. That is going to create debt. And I always like to remind everyone that, you know, debt is a market just like any other market. So when you get into the debt market, you need to understand that there are players, there are rules, and there are some strategies. If you fail to understand these things, you are more likely to be on the wrong side of the market. And this module is really meant to help you, to move you closer to the right side of the market. First things, let's understand the cost of debt. I always like to say that there is a true cost of debt. And I always like to remind you that, you know, you need to treat debt like any other commodity. If you go and purchase maybe a pair of shoes, you are paying. There's a cost that you are incurring for you getting those pair of shoes. So it's the same when you get into the debt market, maybe to get a loan, to get cash, there is a cost that you are going to incur for getting that cash. So what is the true cost of debt like really? People, when we talk about the cost of debt, the only thing that comes to mind is interest. The interest that you are charged on your debt. But I say that is not the only cost that you are going to incur. So the true cost of debt is going to include the interest that you are charged on your loan, is going to include the insurance that you are going to pay for that loan, because debt, loans and insurance are inseparable, whether you like it or not. If you are going to go into the regulated debt market, I'm talking about the financiers, your commercial banks, maybe a bit of micro lenders, the regulated micro lenders, you have to know that debt, loans and insurance are inseparable. There is no how a commercial bank is going to give you a loan that is not insured, because they need to be protected, and as well they are protecting yourself, because the question is, what is going to happen if maybe you die month 3 of the loan? What is going to happen to that loan? Somebody else will have to pick up the risk and settle the balance. So that is where insurance is going to come in, and I tell you that insurance is a cost to you. Is money that you are going to pay out of your pocket. That is another cost of debt. And thirdly, we say that the other cost is administrative fees. These guys, your commercial banks, when they process your loan application, they have hired people who are doing this loan administration or loan processing. These people need to be paid every month. So how do they get paid? They get paid by you. So you are going to pay a certain percentage of the loan that you are getting as your administration fees. And I say any other fee that is related to the loan that you are getting is a cost. And today I want to challenge you to say that if you have a loan, if you do have a loan, go and take your loan agreement and go and read carefully that loan agreement. You are going to see there's going to be a term somewhere there, a clause that is going to speak to what we call annual percentage rate, abbreviated as APR. That APR is the true cost of debt. When you compare that APR that you are going to see to the interest that is disclosed on your loan agreement, you are going to see that the two differs. APR is always going to be higher than the interest rate, because APR has factored in the other cost of debt, the other things that we spoke about, insurance, and particularly also the administration fee. This is the true cost of debt that I want you to understand. Understand that debt costs you money. It costs you money, and this is money that you are paying out of your pocket. Now that you understand the true cost of debt, this is when we can talk about the options that are available out there, your borrowing choices, because we know that, you know, as you open your As you switch on your TV screen, you look at your phone, debt is sold to us left, right, and center. So you need to understand what is available out there. What are the choices that are available for me? I always like to say that the choices are broadly categorized into two main groups. We have what we call revolving debt, and we have what we call amortizing debt. So revolving debt is this debt that you get. It doesn't have an end, or it doesn't have a determined loan repayment, that you're a fixed amount that you are going to pay. It's revolving in nature. So you use it, then the balance is going to be replenished. You use it. So it's open-ended in nature. An example that we can give on revolving debt, we have credit card. You know that credit card, you are going to be given what is called a credit limit. Once you have this credit limit, you can use it today, pay the next day, and then it's open again for you to use. The second example that we have is your store cards. They are going to give you a limit, and every time you want to shop, you are going to take something, you pay, you take something, you pay. So this loan is open. We say it's open-ended. So those are the key examples of revolving debt. And then we also have another one that is not normally sold out there to us, as sold to a few select in our society. We call it an overdraft. An overdraft is also a revolving debt. Overdraft, what essentially is going to happen is you are going to be given a limit on your current account. So this limit, it allows you to overdraw your account to that amount, and then you can use, you can pay, you can use, you can pay. So it's an authorized way of overdrawing your account. So that's an overdraft. Unfortunately, a lot of us, we don't know about overdraft. It's only sold to the affluent in the market. So those are the three examples of revolving debt. Now let's move to amortizing debt. Amortizing debt is the common one that we know. This one, normally what happens is when you go and get it, you are going to be given a predetermined installment, and also you are going to be given a term. So for this term, you will be paying this amount, and then the amount is going to reduce your loan for the duration of the loan until it's paid off. Examples of amortizing debts are your personal loan. You know that when you get a personal loan, you're going to get an amount, and you're going to have a minimum installment, and you're going to have a term. So you pay until the personal loan is paid off. You have your car, or we call it asset finance or asset-backed loan for your vehicles. Also the same thing, you're given a minimum installment, you're given a term. And then the third one is our mortgage. The same thing, you are given a term, and then you are given an installment that we have to pay. So these are our amortizing debts, and these are the options that are available out there. You can go lean towards the revolving debt, or you can lean towards the amortizing debt, but mostly we go with the amortizing debt. But I just wanted you to know that there's also revolving debt that you can use. So the options are available for you. You just need to understand how these loans are structured and the implication as well on your income. Are you ready to take this debt, or are you not ready? So it takes a lot of soul searching. It takes a lot of you sitting down, working through your budget, making sure that whenever you are going to commit yourself with a loan, it's something that you have planned for. You also know what you are going to use the money for, because we have this thing of getting into the debt market just because the loan is available, and just because you've been told that you qualify for a loan, you get it, you've not planned for it, and then you go and misuse the money. You use it anyhow, and then you are going to remain this debt that is going to chain you to a certain situation for 5 years or maybe more, because you did not plan. So those are the available choices. I hope they're very clear for you, and they'll help you to make an informed financial decisions whenever you want to take a loan, or whenever you want to make that decision to take a loan. So this is really our introduction when we look at the debt market. I hope now you understand how to look at the cost of debt. You can work out the true cost of debt, and also you have an understanding of the options that are very available for you. This is all that I had for you. This is all that we can talk about in this module. I will see you in another module. Thank you.